I think you're going to see the Mar-a-Lago Accords pretty soon. It really does look like we are headed into a new monetary system. We are no longer going to kick the can. All of the pain of every previous administration, going all the way back to Nixon, all of that, all of the cheating on the world monetary system is all going to come to an end during this administration, and it's going to be big. We are talking about a revaluation of gold. In the book that you helped me, you were doing the research and all the charts and things like that along with me, and I did describe the shift in monetary systems, and to me, that looks like it is exactly what is happening. On my last appearance, I put together a couple of videos. Mike looks like I'm reading a question here. So I put together a couple of video clips. Scott Bessette, the Secretary of the United States Treasury, saying that within the next 4 years, there's going to be an economic rebalancing or a monetary rebalancing in the world. So he's talking about a brand new monetary system. And then I put that together with a clip of him saying how much he likes gold, that gold is this thing that can't run a budget deficit. It can't do this. It can't do that. It's just this separate thing, and that the world used to be on a gold standard. In the first video, he also says that we need a Bretton Woods 2.0. And so I think you're going to see the Mar-a-Lago Accords pretty soon. I don't see Trump dealing with every country. He's got 80 countries now that want to cut a deal, and they don't want to be frozen out of the U.S. markets. The problem is China is the holdout, and they are playing real hardball with Trump. And if Trump's tactics don't work, back in the 30s, first we had the Smoot-Hawley tariffs, and they helped to plunge us they took a very severe recession and turned it into the Great Depression. And then today, we've got the tariffs that Trump is trying. And then right after the Smoot-Hawley tariffs, they nationalized gold, and they allowed the free market actually to revalue gold to $35 an ounce. We are talking about a revaluation of gold, but this time it isn't from 20 to 35. This time it is from 42 and 2/9 dollars all the way up to at least market value today. But what people don't know is if you look at the H.4.1 Fed release, you see all of the factors affecting reserve balances. And a very final factor is currency in circulation. And it shows what backs that currency. And it is mostly U.S. Treasuries. All of America's gold, it's like 99.7% of America's gold backs the U.S. Federal Reserve note, the cash that is in your wallets. 92% of the currency supply is bank credit. It's not created by the Federal Reserve. If it's digital, if it's in the bank and you've got numbers representing U.S. dollars, it's not Federal Reserve notes. It wasn't created by the Federal Reserve. It was created by the banks. But the Federal Reserve notes that are in your wallet are currently backed by gold at, I believe it is 0.4 cents per ounce, not dollars, but cents per dollar. Mm-hmm. And so to adjust that to a rate where the currency in circulation would be fully backed, fully redeemable in gold, requires about $12,000 an ounce. Got anything to say about that?
It's an exciting prospect, and I'm glad I saw it ahead of time, or thanks to your help over the many years. So
it really does look like we are headed into a new monetary system.
Yes.
And in the book that you helped me with, it says there's a section on something, I can't remember the actual title of it, but it's like the lyrics change here and there, and the musicians change, but the song remains the same. And I go over how history keeps on repeating. All of these pressures of a monetary system build up, and then there's an emergency conference. We had the Genoa Conference of 1921, I believe it was, and then the same thing repeated. They have these phony gold standards instead of just using gold, and that allows this disequilibria and pressures to build up, and then the foundation starts to crumble. And then they have the Bretton Woods Conference of 1944, and then same thing, phony reserve ratio gold standard that it was fake. And all these pressures and disequilibria build up. France starts redeeming all of their dollars for gold. And then Nixon takes us off of gold, and we have the Smithsonian Agreement of 1970, which just fell apart immediately. That was the one international agreement that did not work. And we fell into this thing of all these stupid floating exchange rates that make international business so difficult to conduct. And so we've been on the global dollar standard since. This was the default. The world was flooded with dollars because of the Bretton Woods system. And we went on this floating exchange rate, global dollar standard. And now that has built up pressures and disequilibria that are so great that it is falling apart. And Trump, in his second term, lose by being the one that stops kicking the can down the road. It really looks like we are no longer going to kick the can. All of the pain of every previous administration, going all the way back to Nixon, all of that, all of the cheating on the world monetary system is all going to come to an end during this administration, and it's going to be big. And what saddens me is that this is mostly right now we're seeing these huge inflows of gold, and we're seeing the gold price going up. But then I've got some evidence here that really shows that this is the whales taking delivery, and insiders, people that are connected with the government that know what's going to happen in the future, and they are front running. GoldSilver.com's mission was to save the middle class one investor at a time, and so far we're not doing that. So John Smith says ratio still near 100. Are we expecting a return to 70 or lower? Absolutely. But these things come later. Dan, could you put back up the page that Alan has open of, okay, so this is goldsilver.com, investing in physical metals made easy. That is really important right now. There's going to come a time where the physical diverges from, and it feels like it's soon. It might happen with the Mar-a-Lago Accords or whatever they are called. But physical is going to take off like a rocket, and paper contracts, which sets the spot price, are going to fall. So in here, we've got the gold price. If you could click on that, Alan, and we've got charts. So gold is currently back up near 3,100. So it fell a day or two ago, and now we're back up toward 3,100 again. And if you could click on silver now, silver took a bounce. There was an intraday, I think it was yesterday, where it was up at 109 or something like that. Not silver, but the gold-silver ratio. So we're back up at 31, and it was down at below 29. And I may still be making a purchase. My insiders will find out what I do. If you can click the gold-silver ratio, this is the historic part. This is why it is exciting to be alive right now. 99.1. Over the last 2,500 years, the time that it's been where silver has been this undervalued compared to gold is measured in just weeks, just a few. And the thing is that the reason it's here is toward the end of last week, the Commodities Exchange increased margin requirements on futures contracts by 25%. And that meant a whole lot of people that were out on margin either had to come up with the extra or sell some of their position. If they sell their position, silver drops. And so that was the reason for the drop and the reason for the sudden bump in this gold-silver ratio. So I find these very exciting times to be alive. What have you got for me, Alan?
Yeah, absolutely. I mean, if you believe the thesis in gold, I mean, of course you and I do, but if you believe the thesis in gold, I mean, you should believe the thesis in silver by a factor of roughly 6. I mean, to get back to the long-standing gold-silver ratio of roughly 15 or 16, which it was for thousands of years, if we're starting up at 100, silver has to outperform gold by a factor of 6 in order to get back to, stability, the historical
Yeah.
norms. So, who knows when that's going to happen? It's not going to be, overnight. It will take several years. But both metals are extremely exciting right now. It's almost like you can't make a bad choice between, your allocation to one or the other. They're both going to be great. They're both going to outperform the stock market for a while. I was just looking up the numbers
They're
today.
both going to outperform everything else for a while, not just the stock market.
Yeah, I was just looking up the numbers today, and people are thinking, some people are just realizing now that like gold is like a possible thing they could have in their portfolio. They dismiss it for all these years as like silly or something like that. And so I get asked all the time, like, why would I have gold if it has no yield and it underperforms the market? And I'm like, have you looked at the numbers? Like in the last 25 years. Gold has outperformed the S&P, the Dow, and the NASDAQ by a factor of 3 in 25 years. So
I thought it was actually a little bit more than that. It's up 1,100%, and the S&P is up 280%, I believe. So it's a little bit more than a factor of 3. It's been the best performing asset class of this century, other than crypto. But when you start at zero, going from 0 to 1 is an infinite return. So you can't even measure crypto. Now, Dean Raymond says, should I sell gold and buy silver? I've got a lot of silver, and I'm about 95% silver and 5% gold. But I am considering buying some more silver, and there is a possibility I might sell some gold and buy some silver right now. I never give advice, Dean, but you need to follow your own heart. Here's what I can say. If you're going to do that, there will be times where you go, oh my God, I did the wrong thing. You're going to say that simply because silver is so volatile. It's going to be a wild ride. It's an easier market to suppress than gold. Can't remember what it is right now, but back in the 80s, the silver market was 1/300th the size of the gold market. You just look at the futures contracts and the times the price, what the value is that's being traded. And so it's much easier for the powers that be to try and manipulate it. But the free market overwhelmed all of the manipulations that they were trying to do. And it just shot past. It took until late 79 for silver to really show the big returns against gold. And it dropped to a gold-silver ratio of just 14. Currently, we're up at 99. If it drops to 20, you'll have 5 times the performance of silver compared to gold. I think it could actually be 10 times just because of all the pressures that are built up and because there isn't that much above ground silver. We've had a deficit now for the past 4 or 5 years where less silver is being dug up out of the ground than is being used up in industry. And so all it takes is monetary demand. Once gold gets a little bit too expensive and people are saying, oh, wow, it was only $250 back in 2001, and now it's $5,000 an ounce, I think the silver is a better bet. So, and then suddenly you're going to see that gold-silver ratio plummet. And so, yes, I think a very good strategy is trading gold for silver right now. And I do want to mention, a little plug for my own company. If you have something, if you've got a storage account with us, or if you have InstaVault, these things become very instant. You can sell your gold and buy silver very, very quickly, and the cost of doing so is much lower than if it's low blood pressure. Great name. The water is filling the Colosseum. Yes. And if you look at exponential growth, we are seeing something right now that is very exciting. We could see the blow off top and in gold and silver this year. It could be happening this year. It might take another 2 or 3 years. We'll see how this Mar-a-Lago Accord goes. And if you've got the Secretary of the Treasury saying that there's going to be a new world monetary system, and that's in my book. I said that this was going to happen a couple of years ago. It's like 3 or 4 pages on it. And it's very entertaining, by the way. So if he said there's going to be a new monetary system, and another clue, He said, we need a Bretton Woods 2.0. That's connected with gold. And then in a Tucker Carlson interview, he said how much he loves gold. And the part of the funnest time of his life was when he was running his funds, and people called him a gold bug. And so these things are lining up to where something extraordinary is coming true. Now, people don't think that there's all these new monetary systems. Why? Because it only happens once in a lifetime. And we are, or maybe twice. I was alive during Bretton Woods. I mean, during the end of Bretton Woods when Nixon took us off but I wasn't alive when the Bretton Woods conferences happened. So I will see it twice in my lifetime. But you weren't alive. You were born under the global dollar standard.
That's right. I was born into fiat, 1988.
Yeah. So, chasing legends, a new Bretton Woods agreement sounds like a horrible idea. It didn't work the first time, as we can see. Yes. Well, this isn't going to be Bretton Woods agreement. It's going to be probably the Mar-a-Lago Accords. And it all depends. Jim Rick.